This is Brian Borgery.
I'm Jennifer Hopp.
And we're here with Uncommon Entrepreneurs, Lunch and Learns. Today I'm excited. We get the chance to hear from Jennifer Hopp, who is a venture capitalist, an investor, and just all around awesome person, especially in helping the entrepreneurial community, both on the island here in Puerto Rico as well as off. So we're going to dive in and learn a little bit more about her today. So to dive in, let's start with your background a little bit. Who are you and how'd you end up in Puerto Rico running a VC fund?
Sure, I'm happy to tell you a little bit about how I got here, and if you have additional questions, just let me know.
Sure.
I spent most of my adult life in Silicon Valley, and I had just sold my software company in 2016, and I had a friend who was in Puerto Rico working with the first generation of Parallel 18. Mm-hmm. I had no idea what was going on at Parallel 18. I had no idea what was going on in Puerto Rico. Hadn't really thought much about it. Having grown up on the West Coast, you don't hear a lot. Mm-hmm. You just know that it's this territory out there somewhere, and we're not taught much. So when he said, come to Puerto Rico, I said, sure, that sounds like a great idea. But I had been working my whole life, so I had this little bit of guilt associated with traveling. And so I said, you mentioned this accelerator thing that you're in. Do they have a demo day? Because I had just, like I said, sold my software company with the intent of going into venture capital full time. Mm-hmm. I just had anticipated that I would join an established firm.
Sure.
So he put me in touch with the folks at Parallel, and Sebastian and Lucas did a little background check and called me up and said, hey, why don't you come down and work with the startups? I had been doing some angel investing and had been involved in investing for a long time in the Valley. So I said, sure. And then I could turn it into a work trip, right?
Yep, exactly. That's how it works. I get the guilt feeling. I'm like, I don't know. I need to be doing something. I can't just sit and relax.
Yeah.
Especially when you're starting your own company or you run a startup, like you can't take time off because it lives or dies sometimes based on your time and attention.
Exactly. So I did that. I came down, worked with the Generation 1, and was just incredibly impressed with what was going on here. And the work that people were doing to start an ecosystem and to create opportunities for startups and the caliber of the companies and the program. And I was just really fascinated. Did not go to the beach a single time the entire week. I was in my hotel room and at Parallel, and that was it. And I was happy as could be. Yeah. I was having such a great time. And then just kept coming back. Then they couldn't get rid of me. Yeah. So I was so interested in the development of the community. At the time, I was doing something called Biz Start Live, which was novel then, right? Because there weren't very many investors doing these live stream pitch competitions. And it wasn't, there weren't any prizes involved. It was just my way of giving back to the community. I would get people from around the world to pitch to investors. And so we did an entire Biz Start Live program for 3 hours just on Puerto Rico. And so we had people come in, and so I was all in at that point. So I kept coming back, and then eventually decided to move.
Got it.
So that's how I got to the island.
Cool. Yeah, and it's interesting for a lot of entrepreneurs I know who have migrated down here for whatever reason. Parallel 18 has actually been a big landing point. Within the first, I think, 12 hours of being on the island, at least with the intent of scoping things out for our startup at the time, we had met with Sebastian, got plugged in right there, thought it was great, then jumped over to other places, Piloto, talked to some lawyers, just all sorts of different things. But it's a good place to come into and see just the innovation going on. I know I came right after the hurricane, so it was great to see like things still happening when maybe a lot of other areas were devastated. But to see the resilience, to see just people working and hustling and just making things happen regardless, even if the power went out 3 times in our first meeting or whatever, like it was awesome. So so you came to Puerto Rico. And you've been here since. And so what'd you do after working with Parallel 18? I assume you still advise and do things for them, but what else?
Yes, so I definitely am still a mentor there, and I'm on the selection board and those types of things, as well as several other organizations now within the entrepreneurship community. But when I first moved here, of course, my plan of joining a Silicon Valley fund didn't happen because I wasn't in Silicon Valley anymore. and there weren't any funds here.
Yeah.
So I needed to figure out what am I going to do to contribute. So as I was getting to know the community and asking how can I be of help, they said capital. What we really need is capital. We don't have any kind of traditional style venture capital funds, especially those that go in early stage. That's what we need. And so I said, okay, I'll start a fund. So that's why ATO Ventures was born. ATO stands for Against the Odds, which I selected years before, thinking it was one of those, this is a side story we don't have to get into, but it was one of those moments where I was like, ATO Ventures, that'd be a great fund. And I had no intention of starting a fund. So, but I got the URL.
Yeah.
And then when I decided to start a fund, that's what we called it. And it seems very fitting for the island.
It is. It is. And I totally get. I'm a domain hoarder. So I've had when I was getting ready to launch a platform for Puerto Rico called Fund Puerto Rico, I happened to already own it before I ever moved here because I had hoarded a bunch of crowdfunding domains.
That's
I was like,
so
oh,
funny.
Cool. I'll just pick this one I already have.
That's funny.
So,
yeah.
I think those
Hundreds of domains.
inspirations happen sometimes, and sometimes, not always, down the road you actually get to use it and capitalize on it. Okay, so you've been helping out in the ecosystem quite a bit. I mean, I've seen you at Bid Angels, pitch competition things, and talking about what you do, and plenty of different groups. So you were going to be working with a VC firm. You're obviously, well, you're not working with Silicon Valley VC firm. So what went through your mind, and how did you end up to what you're doing right now?
Well, so when I decided to start the fund, it's kind of based on two strategic advantages. One, just being here. So we won't go into all of that because most of your listeners probably understand the benefits of being in Puerto Rico, or we can if you want to. But so that's part of it. Just the fact that we're here on the island. The other part is a strategy that would work anywhere, and it's a risk mitigating strategy for getting into startups super early. So the earlier you go in, the higher the risk, which is why we don't have very many early stage venture capital funds at all, let alone on the island. And when I say early stage, I mean really early stage, pre-seed, which is a relatively new concept to go in as venture capital before launch or before revenue. Typically, that's sort of the friends and family angel rounds, and then venture capital comes in after there's a revenue. But we like to go in before you launch, which is unusual.
And why?
The reason we like to go in is because we feel like we know that, I shouldn't say feel, because we actually have data on it. We know that we have a way to mitigate the risk. So what makes going in that early risky for an investor is the fact that about 70% of seed-funded companies, and these are companies that already have received capital from smart people, about 70% of them fail. And when you look at the reasons why they fail, most often it's because of lack of product market fit. So what is product market fit? Everyone has this weird definition. People throw it around. All it means is, are enough people buying your product?
Sure.
Right? Are people buying your product, and are there enough of them that it makes it plentiful enough of a market to sustain, right, and to grow and scale? And so the issue is that a lot of founders will make something really cool. They'll talk to their customers. They do all the lean startup stuff like they're supposed to, the customer discovery, the iCore, and all of that. And they launch, and yet still nobody buys their product, or not enough people buy their product to make a market. And that can all be tested, right? You can test that ahead of time by actually talking to your customers, one, but also putting the product in front of them and seeing if they buy it. It's one thing if they say they'll buy it, it's another thing if they actually buy it. And so we do a strategy called market validation testing. So we like to go in before you launch because we want to go in before you make the mistakes.
Yeah, exactly.
And so we put a small amount of capital into the company before it launches. We help them to validate the market. We help them to test all of their go-to-market strategy assumptions. We make sure that the customers are there. We make sure that there are enough customers and scalable, reachable markets that we can get to. And if we can hone in on all of that, then we put in a bigger chunk of capital. And so what we've done is we've given investors in our fund, LPs in our fund, they call them limited partners or LPs in our fund, the ability to get in as early as an angel investor, right? But with the risk profile of a later stage investor.
Sure. That's huge. And to me, it intuitively makes sense, but you're absolutely right that there aren't a lot of funds. I don't personally know of other funds that do exactly that. I mean, there's some that will get in super early, but it's definitely not common, and for sure not common here on the island either. So one, I think it's awesome that model and what you're doing. So how long have you been going at it here on the island with ATO Ventures? Like how long is the fund? How many companies have you invested in, or where's the stage of things?
Yeah, so we are just like a startup, right? Venture capital funds are often like startups. We have to raise the capital.
Yep.
And then we deploy it. So typically that happens in a linear way, but not entirely. So we actually are raising and deploying at the same time. So we raised the first half of the fund very easily, very quickly out of Silicon Valley, and then the thought was to come here and raise the second half. We are now starting to see traction on that toward the end of last year. Everything kind of went on pause, like the whole world in 2020.
Sure.
So we kind of said, okay, now what? So during 2020, we focused on building out our startup vetting systems and working more with identifying how we're going to work with startups, because the fundraising stuff was kind of put on hold. Especially, it's even harder when you think of raising a fund than raising capital for a company, because of just the way the fundraising process works. And so we did put things on hold until finally in about Q4, people, I think, started to realize if they're going to invest, it's going to have to be over Zoom. We're just not going to get together. So in Q4, we raised quite a bit of capital, which was great. And now we're finishing up our fund. We had some really positive things happen at the beginning of the year with some of our portfolio companies, and their valuations increased dramatically. So one, it's caused us to close the fund early. So we'll be closing within the next month, which is great. And two, we increased the size. So originally it was just a $3 million pre-seed fund. Now it's going to be a $4 million fund. So we're finishing that up now.
Awesome.
Yeah.
So what are the sizes of deployments? It's a $4 million fund. You said you give a little bit amount, kind of pre-validation, then I assume contingent on that success more. What are those check sizes, or how much can a company look to maybe get working with you?
Yeah, sure. And first thing I'll point out is that a $4 million fund is very small. It's kind of a micro fund. The way we designed it, especially because a lot of the investors that are coming in are new to venture capital, is that we wanted them to have flexibility. So even though the fund is only $4 million, our AUM, or what we call assets under management, will be much greater. Typically, you would raise like a 20, 25, up to $50 million fund for an early seed stage venture capital company. And then you would do follow-on investments. A lot of that capital would go to Series A, B investments. However, what we do is in the fund, we're only doing pre-seed and seed. For the follow-on, it's optional. Our investors aren't tied to it. So they get into our fund with a very small level of capital, and then they have the option, if they want to double down as the companies do better, right?
Got it. Would they double down through the fund and just end up increasing, or you'd set up a second fund or something, or are they doing it individually?
We set up separate SPVs for those follow-on vehicles. So an SPV is a special purpose vehicle or a single purpose vehicle. You've heard people define it different ways, but basically it's a fund just for that deal. So that's exactly what happened with our first portfolio company, which is an interesting story because it's a medical device, and they came down to the island in 2019, pitched to me and my LPs for the first time for their first seed round at Parallel 18. And did the same kind of tour that you did, looked at the manufacturing plants, met with the government, met with all things, and they hadn't been thinking about Puerto Rico at all. And they were going to manufacture in China. And I was like, I must have said, come to Puerto Rico at least 18 times a day. And finally they were like, okay, we'll come. And they were like, oh, wow. We didn't know what was here. And so now they're going to be manufacturing here. But so they pitched in 2019. They also raised, just a few months later, $3.5 million, right?
Great.
That was through us, and to answer your question, we put in $35K to do market validation testing. They passed, so then we let them pitch here, and then we put in $250K, but then we used a special purpose vehicle to raise the other, the remaining, 3.25.
Got it.
Right? So that's how it works. So we were able to raise it, and it was almost all of our LPs went into that second round. 80% of our LPs went in, and there was one outside co-investor that came in as well. So that's how we structure it. So the fund itself only puts in small investments, usually around $285K-ish, 300K total between the two, seed and pre-seed. But then if the company needs more, we go out and get it.
Okay, fair enough. I like that. So a couple things. One, what verticals does your fund focus on?
Yeah. So we do mainly technology, in health, fitness, wellness, and digital media and entertainment.
Okay, cool. Have you, and why did you choose those verticals?
So it's actually interesting. Most people don't ask me this question, so I don't know if I've ever answered it.
Okay.
The health, fitness, wellness comes from a personal passion of mine that ever since I was a kid. I didn't study anything with regard to medicine or fitness or health in terms of through university, right? So university, I did economics and Japanese and business. But I was just always fascinated by it. So I was the kid that was asking my mom, like, how does an apple work? She's like, what do you mean? You eat it and you get energy? I'm like, no. Like when you take a bite and you chew it up and it goes in your stomach, then what? And she'd look at me like, the library's over there.
Sure.
So I went. Yeah. And so I'm always reading medical journals and looking things up. And when I'm taking supplements, it's because I've done all the research and I've been in the gym and playing sports since I can remember, so biomechanics and all of that. So it's a hobby. Yeah. So that's where the health, fitness, wellness comes from.
Fair enough.
Digital media and entertainment is because I happen to have a lot of context in the creative industries. Mm-hmm. So before I decided to do a fund, I was doing a lot of angel investing with creative types. So chefs, athletes, trainers, musicians, actors, and a lot of them are in these really super old industries with brilliant ideas of how to disrupt them, but no background in technology or venture capital or business. And so I found a way to kind of bridge that gap. And so I didn't want to drop it because it's one of those things where most of those industries are ripe for disruption, right? And because it's super fun, and I have a lot of contacts there, so I kept it. And it fits well with Puerto Rico. It just so happens that the two areas that I have a reason to be in are very good for the island. Like medical is obviously perfect for here, and so is entertainment. So it worked out well. Yeah, no,
both of those are great. In addition to, I mean, for anyone who doesn't know, Puerto Rico has tons of tax incentives for almost everything, but there's specific creative types of tax incentives for businesses. There's export services. There's lots of, I guess, added benefits, which again, we won't go into all the details, but for being here in Puerto Rico. And ideally even starting or launching a company here, if you can. Yeah, so circling back to some stuff that we had talked about previously and off camera, getting a little bit deeper into differences between venture capital, private equity, and even you've mentioned differences between private markets and private equity. Could you kind of lay out the playing field of that part of the world that most people I don't think understand?
Sure. Nor would they have any reason to.
Sure.
So we hear a lot of confusion, like you mentioned, between private equity and venture capital, and a lot of that comes to exactly what you said, and that is we use the term private equity in different ways. And one of them is interchangeably with this terminology of private markets. So if you think about, if you take a step back and you think about the difference between public markets and private markets, public markets are, of course, all of those stocks of a company that are traded on exchanges that anyone can purchase. Mm-hmm. What the private markets were for originally is professional investors to purchase. And the reason is there's less information known about those companies, and so you have to be a professional investor. Now with the Jobs Act, other people can get involved even if they aren't professional investors.
Sure.
And even if they aren't accredited investors in some cases, and you know way more about that and can talk more later, I'm sure of it. But that becomes kind of the beginning of the confusion, is that people, instead of saying private market, they'll say private equity, which is it's the same thing. It's a private equity market, right? So you have this term that's already creating confusion. Within the private equity market, there's many different types of vehicles, right, that can invest into private companies.
Sure.
Two of the most common are private equity funds, or firms, and venture capital firms. So that's where you get the confusion. So private equity firms are part of the private equity market, and venture capital firms are part of the private equity market, right? So the difference between PE and VC is nuanced, and that's what also creates some of the trouble understanding the differences. The similarities are that they're both buying shares into these companies. They're they're using capital, sometimes other things, like knowledge and equipment and whatever else, but they're making an investment into the company in exchange for a piece of the company in hopes that that startup or that company is going to use the value to create higher profits, and therefore they get their return. They get their return when someone else buys their shares. Unlike the public markets where you can sell your shares at any time, you can't sell your shares at any time willy-nilly in a private market, right? In a private fund or company. So certain events have to happen. You can usually sell your shares when there's an acquisition, when there's an IPO, or if there's a secondary offering on your shares. So it's very limited when you can get out, which is another reason why the government tries to control who can participate in this market, because it's not liquid. So those is kind of where the similarities are between PE and VC and just anything in equity. Where the difference comes is in the amount of capital, the timing of the capital, the amount of the company they acquire, and the goals of that capital. And it's not clearly defined. People will argue about where these lines are. So with venture capital, it's typically going in earlier, and it's going in, by going in, I mean actually investing in the company earlier, and it's investing smaller amounts. What smaller means is all relative, but we're talking, 10 million, not a billion, right? So there's smaller investments, and it's generally for a minority stake in the company, right? And it's higher risk, as we talked about before. Private equity is often going in later stage to an established company that already has revenues. They may or may not be profitable. It's often taking a majority stake in the company, and it's often in order to do some sort of turnaround. The investors feel like they have some value they can bring to the table to help the company become more profitable, so they're pretty sure they can get their investment returns. Now, where the gray area comes is when you have something like a small investment that's a majority ownership, right? So you're like, well, is that really private equity? They own majority, but it's a small investment. But depending on the size of the company, a small investment might still be the majority, right? Or depending on their terms. Or if you have an early investment that is a majority, right? So if you're mixing those things up, then it becomes gray. Or if you have a later stage investment, and this is where most of the confusion is, if you have a later stage investment, but you don't take a majority equity ownership, is it late stage VC or is it private equity? Usually you would classify it as late stage VC, but it's mucky. So,
and then it also depends on who's doing it. Like if it's a traditionally private equity firm, but then they happen to do a smaller investment that's out of characteristic. Normally they stay pretty consistent, but then that's, I guess that's private equity. But if the exact same thing was done by a venture capital fund, that's venture capital. And it could be the exact same thing. It's just depending on who did it. Almost.
And on the surface, as far as the company being invested in is concerned, it really doesn't matter what they're called. There are some nuances in the regulations and the filing requirements based on what you've stated your purpose is going to be. But what's interesting is what you said. So if you're always doing one thing and then you happen to do this side thing, does that change what that side thing is? And that's what people argue about. Because usually funds will allow you in what we call as our LP agreement or our limited partner agreement, which lays out the purpose and what you're going to invest in and how big your check sizes are going to be and what industries you're going to do and is it PE or VC or like all of that is laid out in your investment documents. There's usually a carve out. Up to 20% we can kind of fudge it a little. So if you're fudging it a little, does it still called by the same or is it called by something new? So
that is, and we've had discussions with others on this, on capital raising as well, and fitting who should go for VC or private equity or crowdfunding and things like that. And it's not, they're all just different tools or options that you have when it comes to raising capital as well. And I think it was on a Clubhouse chat that we were part of that this had come up initially and sparked this part of the conversation, but people just tend to assume, especially after maybe seeing some TV shows over the last few years that kind of talk about investing or VC or whatever, and they just assume anything investing in startups is venture capital.
Yeah.
And it might be angel investing, they might have crowdfunded, it might just be a random I don't know, private placement deal that someone did. Not everything is VC, but it gets that connotation. And sometimes VC gets, and I think you would agree, unwarranted vulture into venture connotation. But I liked how you explained it. It's because of lack of understanding. It's like VC firms go in at a certain time to do certain things for certain companies. Like there is a trajectory, like becoming a unicorn or having a huge multi-X return, and not necessarily a mom and pop business or maybe just a smaller company that's not trying to go parabolic or anything. Shouldn't go after maybe VC or other types of funding. So I think that's another area where there's just a lot of, I guess, lack of knowledge, and not that it's anyone's fault, it's just new. Like we haven't had technologies or even regulations most of our lives to even allow the average Joe, for example, to get involved in a lot of investing, especially in the private markets. So I don't know, do you have any thoughts on that? Like with an audience listening, what would you want them to know about different types of funding vehicles and maybe any other key differences or what they should just keep in mind, especially if they're looking to start a business?
Yeah, sure. There's a few things in there. One is, like you mentioned, venture capital in the traditional sense, and you're right, the term has become, when people say venture now or venture capital, it's almost become private equity, venture capital, like it's all kind of, it just means buying equity in some company, right? It's all kind of mashed. So when capital V, capital C, the traditional venture capital, it really is only structured in the traditional way, and now we're getting more creative models, but in the traditional way, it's only structured for companies that you think are going to go to the moon, that have the potential of being a unicorn, at least have the opportunity. Most of the time, they will be acquired ahead of that. But what's interesting, and where I think there's a particular opportunity on the island, is other forms of equity for smaller companies, even the mom and pops, where it is more about sustainability. Now, they have to have some sort of growth mechanism for people to get their money back out. But it doesn't have to be like in venture capital or private equity, capital PE, where we're doing major liquidity events of acquisition and IPO or stock sales and that kind of thing. It can be something like a rev share. Where I get a few cents on every dollar you sell, or it could be dividends, where I get a piece of the profits. And then that enables the smaller company to use that capital to grow and to increase their profits. We can buy a new truck, we can hire more people, we can increase marketing. So they have to be able to grow. It can't just be to sustain the current level of business. Obviously, no one's going to get any money off of. You've got to be able to increase your revenue and your profits for that to work. But it doesn't have to be venture capital for it to be an equity model that works. I think this vulture thing, it comes from people just not being aware, right? So, and then shows like Shark Tank don't help. But you do have to give up a piece of your company. And as an entrepreneur, I'm thinking, why would I want to give someone a piece of my company and voting rights if they're on the board, which doesn't always happen, but they always picture, that's the biggest fear for entrepreneurs. I'm going to give up my company and then somebody else is going to tell me what to do. The whole reason I got into this is to not have any bosses, right? So that becomes the fear. So one is, you're rarely, except for in terms of buyouts, and that's why it's designed, they're there because you can't, the CEO usually is not doing a great job and they need help, and they are welcoming the help because they're drowning. But typically, especially for an early stage company, you're not going to be in a situation where there's one other person that has the majority ownership. Eventually you will dilute yourself down if you take a lot of capital to the point where you don't have the majority ownership anymore. But it's going to, the ownership of the company is spread out among a bunch of investors, right? And everyone's going to be talking about it. So I always say, when I was doing my own companies, I always would say that if my board wants me out, then I probably should get out. Like,
Sure, yeah.
I shouldn't be holding on. So
Yeah.
it never was a fear for me, because I was always very confident that I was going to do the right thing, and if I didn't, I wanted out. Like,
Yeah.
I'm tied, my equity and my value is tied to this company too, and if
Yeah.
somebody else can do a better job making more money and having better impact, let them.
Yep.
So I only want to be in as long as I know that I'm the best person for the company. But that fear of being ousted or having someone make all the shots is a little bit unfounded, and it does happen. But we hear the stories about it happening way more in
Sure.
disproportion.
With anything in news too. I mean,
Yeah,
we see
it's
all the bad stuff on the
disproportionate.
news, but there's way more good stuff that happens
Right.
in the world. So.
And the other thing is that I think that there is a disconnect, and especially in places that are new to venture capital or equity investing at all, like Puerto Rico, and it's not just Puerto Rico, but any place where it's new, is that we're used to getting government grants, right, which don't have to be paid back, or loans where they don't take any of our company. In both of those cases, they aren't taking any of our company.
Yeah.
The problem with those is grants are hard to get and take a really long time. If you need a new truck to make a delivery so that you can take a new order that's for $1 million and going to make your company, you're not getting a grant tomorrow.
No.
Right? It just takes way too long. Not that equity is overnight either, but
Sure.
grants take a long time.
I will not write another grant ever.
Yeah.
I hate grant writing. I don't even care if they want to give me a lot of money. I just can't do it.
Yeah, and the problem with loans is, one, usually early stage companies can't get them because they don't have any collateral, they don't have any sales.
They don't have 3 years of bank statements to show the bank or whoever they need to get a loan
all
from.
of these things. And it's risky because you've got to pay it back and you've got to have collateral. So if your business doesn't go the way you want it to, then you're filing bankruptcy, you're giving up your house or whatever you put up for collateral. Like, it's risky to take out a loan on an early stage company, which is why they require so much documentation.
Yep.
So do you know what happens if you take a venture capital investment and the company fails?
Nothing really.
Nothing. So that's the whole thing, and that's what people don't know and don't realize. They're like, oh, this
It's risk
investor.
reward.
Yeah. So you can either you can give up part of your company, and it's expensive in that regard, but you're not taking on the risk. The investor's taking on the risk. If the company doesn't go the way you want it to, or you think it's going to,
Yeah. Like if
You don't
you
sell your
fail,
house.
they're losing millions of dollars, and you're not like getting thrown in jail or losing your house.
no,
Like,
it's like, oh well, that investment didn't work out, and that's why that's the piece that I think that we have to educate people on, is that there are benefits to taking private equity investments, and mainly it's access to capital, right? Once you get one firm in, they will bring others. It's information and experience, so those things are obvious, but it's also you've decreased your risk in terms of what's going to happen if the company fails. You don't have to sell your house.
Yeah, no, absolutely. And again, it just depends on the type of company, what you're trying to do, what your goal is for it, stage of company. I mean, it's great that, you have early stage, because that's one of the toughest things. I always talk about this with some of my business partners is, in our experience anyways, the hardest capital raising amounts are like between 1 and 10 million. If you're raising less than that, then you can maybe find something. It's not always, it could be a grant or it could be something else, or in your case, it might actually be VC. But if you're like in that single digit millions, you think, oh, well, $1 million should be easier to raise than 20 million. Not always. Sometimes it's way easier just to earn a lot more.
Hard, yeah.
If you have something to back it up, of course. But like, it's just so interesting and nuanced. That's actually where, you know me, but I come from like the crowdfunding world and the ground up, and I've been very bullish on that as another funding model. It's not for everyone, just like venture capital. I guess here's a question. Venture capital, private equity in general, what percentage of startups do you think even makes sense to go after that type of funding?
So startups won't be looking at private equity, right? Because that's usually later stage.
Yep.
So startups that look at venture capital for whom it makes sense, I would say, is under 5%.
Yeah, which leaves a lot. I'd say it's similar for crowdfunding even. for investment crowdfunding, not like Kickstarter, pre-order product. But I'd say it's very similar. And then you have debt, traditional friends, family, fool, just build a sustainable business that you can grow. I think that's actually overlooked a lot these days, at least from my opinion. I think there is something to say for venture capital models and things like that, but a lot of people will see these unicorns and those like, oh, well, Facebook didn't make money for like a decade and now they're one of the most profitable. But that's very specific to that business model, technology, user adoption, like whatever. And if you're running some entirely different company with a different business model, like you shouldn't ever expect that type of outcome, even if you got venture capital or some other investment. So I think a lot of it is just lack of knowledge in general, which is why there's laws and regulations so people don't go throw their whole life savings into something because they just didn't understand maybe the difference between a funding model or something. But so yeah, saying all this, it just comes down to educating ourselves and helping others understand the nuances within the investment world. I think just doing that, which you do a great job of, by the way, just doing that, I think will help a lot of companies and investors just make better decisions, just have more success, be happier about it, lose less money, and all around just kind of know what's going on when they get into the investment world or when they're watching like Shark Tank or some of these other shows or things that kind of idolize investments, which is great. I mean, I love Shark Tank in general and whatever, but there's always kind of the back end information and understanding of the mechanics, like how does investments, how do businesses, how does raising capital work? So, well, thank you for that. I wanted to shift for this last part a little more Puerto Rico focused. We're in Puerto Rico. I've been here a few years. You've been here a little bit longer than that even. We run a large entrepreneur group on the island. You've been helping a lot of startups on the island. I do want to hit on what are your favorite aspects of Puerto Rico when it comes to starting or running a business that you think anyone and everyone should know about?
You threw a twist in there. Starting and running a business. So I think first it's important to know that I might be different than a lot of the people that are moving down to the island, in that I moved here because I literally just fell in love with the people and the culture and the energy and the vibe, and I didn't know what I was going to do at the time and didn't really care that much. I know that there's a lot of discussion about the tax incentives, and that creates a draw for people to come down. But I believe, and a lot of people will say, you know, I came down for the taxes. I stayed for everything else. And I was a little bit different. I came down for everything else, and I actually personally haven't seen benefit from the taxes yet because of the way the funds are structured, right? So it doesn't matter. But so for me, it's all about loving where you live. And the cost and the tax savings doesn't really help if you're not happy. I found that I am extraordinarily happy here and feel like this is where I'm meant to be. And so that comes first.
And that's super important.
And that's like a life thing, business, otherwise it doesn't matter. So it doesn't matter, you know, how much, like I said, how much it costs or what the incentives are or whether it's good or not to start a business. You've got to love where you live because that's going to trickle down and affect every single aspect of your life and your business. So that's number one. I would say the best thing about being here is you're going to love it. Whenever anyone comes to visit, I always tell them, pack a big suitcase because you're not going back as soon as you think you are. And then everything builds from there. So starting a business here, I think what's good is just like anywhere, especially if you're doing a digital business that can be started on an island, right? Then you've got the lifestyle and the culture that enables you to have flexibility, right? I think what's great is the energy that we have, especially for early stage companies. There's a vibrant community, not just in San Juan, but popping up all over the island with co-working spaces and incubators and the university programs, and everyone is very welcoming and helpful.
Absolutely.
And so you can find the resources that you need, and you're not competing with thousands of other little startups trying to get a piece. Like
Yeah.
if there's enough room for everyone here still. So I think that those are the important things. And then of course you've got, if you're talking about, top line, bottom line, actual business stuff, obviously the costs of doing business here are great comparatively. There is red tape that you have to learn. But what's good about it is there are people that know how to do it. So you could just hire really awesome accountants and attorneys, and you don't have to think about it, which is what I do. I used to do, when I did my first companies, I would do all my finances and accounting myself. No, I don't anymore. So I think that that's the biggest draw for any company here is the environment, the ecosystem, the fact that you can get things done. And then obviously there are things unique to Puerto Rico, like for example, our medical device company. There's nowhere else better in the world for a medical device company. Right? We've got all of the talent and expertise here. Pharma's the same way. There's you mentioned entertainment in the movie industry. People don't realize that it's growing, but has been here a long time. Right? So there are very few industries where it doesn't make sense to be here. Right? Like, okay, if you're growing corn, maybe not a good environment, but but most of the time, especially for digital companies and anything like that, there's just no better place to be.
Yeah, I agree. I sit back and think like, okay, well, I don't have to be in Puerto Rico. Why am I here? Especially with a bunch of kids and whatever. So well, one, my wife likes being by the ocean and whatnot, so that's good. But for me, it's always been just the community. That's the biggest driver. Like, take everything else aside. Yeah, maybe there's some red tape or some annoyances. Yes, there's tax incentives, but even if I don't have tax incentives, like, I don't know anywhere else I'd want to be. I've been in other great ecosystems for businesses. I mean, I really like Utah's ecosystem where I was before this. I think it's great, very different than here. But I don't know, when I think about it, I'm just like, there's nowhere else I'd rather be. I can go into San Juan or wherever. I live around San Juan, so I can go into town and come home with 10 different opportunities or people who want to collaborate or whatever, and it's a good problem to have. Like, hey, too much opportunity. I have to learn to say no, which has been my biggest problem ever. So, like, but that's a good problem to have. Better than there's no opportunity, I can't do anything. So I agree with you on that front. And I like that you focus on the lifestyle aspect first, because a lot of people don't. Many come around to it eventually, but a lot don't. And there's something to say for just being happy. like you don't have to raise tons of money and just be rich. Like I'm still in the middle of my journey as an entrepreneur and everything, and I see myself even in the last couple of years just like, yeah, I could even start this business, which would be awesome. Maybe it could be $1 billion, but the stress that it's going to bring and the not sleeping or not being home with my kids or whatever, it's just not like worth it. Even though that could be a lot of money. And earlier in my career, I'd be like, well, yeah, absolutely sacrifice everything for that. But now I'm getting to the point where I'm okay saying no to that. I just want to like enjoy my day, maybe my life. So I think that's awesome.
I think I just want to touch on one thing, because what I don't want people to hear as they're listening is that it's lackadaisical or slow. So when we talk about the culture here, we're not, people always say, oh, Latin America is slower, blah, blah, blah. It is in some ways, but that doesn't mean that the startup communities aren't hustling.
Oh yeah, work hard, play hard.
It is work hard, play hard, and people, I think that they have a good understanding of what I always call hustle, don't grind, right? So in Silicon Valley, we have this kind of grind mentality where you're just going to grind yourself into the ground. If you want it bad enough, you're not going to eat, you're not going to sleep, you're going to keep going at all costs. And that's stupid. Like, that's the fastest way to kill your company, is to kill yourself, right? That should be obvious, right? But here, we still have the hustle part, which is the way it should be. People are working late. You'll see them at the co-working spaces till late in the evenings. People are getting things done. They're working on evenings, but they're doing it with a smile on their face, right? They're doing it as part of something they're enjoying. They're doing it because they just went surfing in the morning and now they're working, or they're meeting up with a group of people. One thing that I think we did amazingly well is, even through COVID, even though everything was online, we still had an activity a minute. right? This community has so much to do. People that move down here like, what is there to do? I'm like, there's something every night. Just get on a couple of mailing lists. There is a meetup, there is a presentation, there is a conference, there is something going on every night. And even in COVID, I think people have done a great job keeping activities going and keeping people connected, even though it's been online.
Yeah, absolutely. I agree. I don't even have anything to add to that. Well, awesome. So to recap everything, there's and for the audience too. So Puerto Rico, awesome in lots of ways. We're not going to go into all the ways. You've heard a few of them here. Definitely check out ATO Ventures and what they're doing. Just atoventures.com or what's is that?
ATO for Against the Odds. ATOventures.com.
Awesome. So check them out. Check Uncommon Entrepreneurs out. And if you haven't, come to some of our meetups. We have them every month. We even do some breakaway sessions and maybe do real estate or investor dinners, different things like that. So be on the lookout. Join our mailing list, Facebook, whatever. Check out ATO Ventures. I know you're active on Instagram.
It's the only place I'm active, so don't send me an email because it goes into a graveyard. I will get to it, but not very quickly. The best way to get in touch with me is to message me on Instagram. I know it sounds ridiculous, but I do check Instagram once a day for the DMs. So that's the only social media platform that I'm active on. I have a LinkedIn profile, but I don't log in, so I don't get the messages. So if you want to follow what I'm doing, I do all the business stuff in the feed. I do all the fun stuff in the story.
There we go. Feed story.
But you can DM me, and I do answer all my DMs on Insta. It's at hopp.vc. So HOPPHOPP.VC.
Awesome.
For venture capital.
And if someone is interested or they have a startup or maybe would like you to look at their company, is that the same best way to get in touch?
No. So you can DM me for questions and things like that on Insta, but to get a meeting without your company, you have to go to atoventures.com and click the big submit button, and that is the fastest way to get a meeting. There's also a form on the front that kind of tells you whether or not you're a fit for ATO Ventures. If you're interested in different type of funding, I do angel investing. In addition to the venture capital. So the venture capital fund, as we talked about, has mandates, right?
Yep.
It's certain industries, certain fund sizes, certain strategies. But as an angel, I can do whatever I want.
Yeah.
And right now, all my angel investing is focused on companies in Puerto Rico. Okay. And so I have another website that's hopp.vc. And if you go there, that's my personal website. And there's also a form there to fill out if you're interested in angel investing of other types that we talked about. That's not venture capital, but is private equity.
Yeah. Awesome. Yeah. So any follow-up questions on any of that, hit our DMs and Instagram. Awesome. Well, thank you for joining us today. I'm sure we'll meet again and maybe do some other cool videos, drop some knowledge and experience for people to learn from. So thanks.
Thank you. I appreciate you having me.
See you, everyone.
Bye.